NinjaTrader. Before we begin today, I would like to do a quick test of picture and sound. So if you can hear my voice nice, loud, and clear, and see the projection on your screen, please type A for audio and V for visuals into the chat screen, which you can find in the lower left-hand section of this view window. Alright, excellent. I see a lot of AV coming through there. Looks like we're coming through loud and clear. Well, once again, welcome into the NinjaTrader webinar room for our very exciting partner introduction event today. You can see we have John Parenti in the room of Currencies, and he's got a great presentation in store for you today. Well, NinjaTrader is pleased to sponsor these weekly partner events as a value-added service for all of our clients. These events are intended to provide increased exposure to the various trading styles and methods taught by our partners. So if you find value in these events, we do hope you'll be able to attend them on a regular basis, as they are all free to attend, and you can see our full schedule of partner introduction events in the following link. I'd also like to mention that for those of you who are interested, NinjaTrader has added more free online trading events both throughout the week and the weekend, including an introduction to NinjaTrader event immediately following today's partner event. We also have our Charting Level 1 webinar tomorrow evening at 6 p.m. Eastern. If you'd like to see our full schedule of training events, please take a look at the following link. Now, I would like to ask everyone in the room today a quick question. So if you could please click on the 1, 2, or 3 in the instant full screen. I'd just like to see what type of NinjaTrader users we have joining us in the room today. And while everyone is filling that out, I would also like to mention that if you want to comment about today's presentation or to learn more about the NinjaTrader software or how you can use Currencies with NinjaTrader, please send us an email to sales@ninjatrader.com. We'd love to hear any Alright, hi, sorry about that. Thank you for letting me know. Looks like for some reason my volume went down. Hopefully it's back up now. Alright, let me know. Looks like it's better. Excellent. Thank you very much. I apologize about that. But again, thank you all for clicking on the poll screen. Looks like we have a tie between our live license users and free license users. So great to see we have so many experienced NinjaTrader users in the room today. NinjaTrader is absolutely free to download, and I see that we have about 15% of you or so not yet using NinjaTrader as well. So very special welcome to you, especially if this is your first time in a live NinjaTrader event. And I would invite you to download NinjaTrader absolutely free from the following. John, if I could ask you, I think your sound's coming through there. If you could just mute your mic. There? Okay, excellent. Thank you very much. Alright, so you can download NinjaTrader from the following link, where you'll be able to try all the features of the software absolutely free, trading into your simulation account. Now, we only ask that you purchase or lease a NinjaTrader license key when you're ready to place a live trade. And the best value is purchasing a lifetime license key, which includes all future enhancements and upgrades to the software, as well as our great lifetime support. There's also a 4-payment plan with that if you'd like as well. If you're not yet ready to own NinjaTrader for life, please take a look at our flexible leasing options at the following link, where you can try NinjaTrader on a shorter term basis, trading into your live brokerage account. NinjaTrader does support over 100 brokers around the world for stocks, futures, and Forex trading. It is also important to understand that NinjaTrader is not a data provider or a broker. Therefore, you do need to get connected to one of our supported data providers or brokers for data. Our preferred data provider is Kinetic, which provides free end-of-day data for stocks, futures, Forex, ETFs, and indices. And you can connect to that at any time by going to the File Connect menu in NinjaTrader 7. Live data packages and intraday tick-and-minute data start as low as $50 a month. And you can also qualify to have your CME exchange fees waived, saving you up to $268 per month. So please visit kinetic.com for more information. And the last link I want to put in here is we have a brand new NinjaTrader YouTube channel, so join us on YouTube where we will be posting up our partner events, such as the event today, which will probably be posted later next week, but free videos for you to watch, training events and partner introduction events. Well, we're very excited for this unique event. Today we have Mr. John Parenti in the room of Currencies. John's topic today will be advanced currency trading tips. So join me for an in-depth webinar on the tools and techniques needed to become a polished professional trader. Thank you all again for your attendance today, and without further ado, it is my pleasure to welcome into the NinjaTrader webinar room Mr. John Parenti of Currencies.com.
Hi, good morning, everyone. Hopefully the sound is good. Occasionally I have technical problems. That's a personal issue, but anyway, you guys can laugh at that. Anyway, I'd like to start out today with a little bit of background about Currencies. Currencies was developed by my good friend and personal mentor, Phil McGrew. Phil started out his career as a nuclear engineer and worked on the subs. So after he was done floating around the seas for a while, he moved to an electric company and worked in a nuclear power plant there. Then he moved on to trading, actually trading electricity. He found his passion for trading electricity and found that, you know, instead of making the utility companies a lot of money, he chose to start out in his own career. Initially he started out trading options, but wanted a more flexible market in which to trade. Naturally he gravitated to Forex and started his career in Forex. Prior to really starting to trade, he took about 6-7 months to develop a system in which to trade off of, and started to work on a rules-based system as well. So after 6 months of hard work to develop the system, finally in 2005 he started trading professionally. Also in 2005 he started selling the code, and mostly it was to friends and family, word of mouth, that type of stuff, and Currencies was born. You know, I'm sort of here to tell you that trading, no matter what market you're in, is risky, and past performance is not indicative of future results. You need a quality system that increases the probability of success, and it really addresses the different market types: trending markets, choppy markets, reversal markets, and breakout markets. Someone's saying that I'm a little echoey. Is that still the case? How about this? Is that any better? How about that? Is that any better? All right, well, I'll keep going. Most systems are designed around one particular market type. Hence, they fail over time because the market changes. Currencies consists of 3 systems that work in one. When one market particular type is active, the other systems basically are quiet. This helps to reduce the potential of false signals. If we were in regular market times, obviously Forex 24 hours a day, but we are on a Saturday, so markets are closed. But I'm going to show you recent signals, not something that was done 4 years ago that was a perfect setup that we say our system works. So all of the signals are going to be recent signals and recent charts. First thing I want to talk about is our breakout system. Of the three systems, the Bollinger breakout consists of about 15 to 20% of our total signals. Breakouts really fill a void in our system very nicely, where most of our signals are dots and require movement. Breakouts need a quiet period. So anytime that we have a market squeeze and needs this kind of consolidation to set up for the ensuing price action, the systems complement each other, dots needing volatility and movement, breakouts needing a quiet period. So the two complement each other quite well. Breakouts need an initial 14 days in which to calculate ATR. That's pretty much industry standard. So when we set up our charts, they're at least 15 days so to surpass that 14-day period of time. As I said, breakouts need a squeeze period, typically the Asian markets where prices are tight, for a minimum of 8 candles or 2 hours, because we're talking about 15-minute charts, and our breakout system is designed around 15-minute charts in order to start the trigger mechanism. Breakouts came around from John Bollinger. Breakouts are good in Forex because there are usually periods of low volatility with low volume, and these are prerequisites for breakouts. Most trading systems have a breakout system, and to that end, not all of them are successful. There's a fine balance between trading these entries. They're tight, false breakouts. If they're too loose, you give up too much. 3 quotes in Bollinger's book that I think are pretty good is number 1. There's something about a dramatic, prolonged construction of the band's subsequent explosion of actively that captures volatility. Price is neither cyclical nor forecastable. Volatility is. Low volatility begets high volatility. High volatility begets low volatility. So as you can see and hear, that breakouts are good for this type of a market. During the trigger period, the system is recording the, and I'll open up a Euro-dollar chart, and we had a breakout yesterday. During this trigger period, the breakout system is recording the highest high and the lowest low. Once that's done, the system adds a fraction of this ATR and gives us entry prices. And I left on these lines here to show you how the breakout system starts to calculate. Basically, here was 5 o'clock. This was on Thursday, and how the market becomes very quiet. Then all of a sudden volatility starts to pick up, or volume starts to pick up. This is usually around the opening of the European section or session. Then our system starts to calculate based on this ATR over this period and starts to calculate prices to get in into the market. We did see a dot, which I'll show later on. That was a very nice trade. This is a long trade. But here again, this again is 5 o'clock, market close. Then we go into the Asian session or overnight session. Our system starts to calculate again. And in the morning, this was about 6 a.m. Eastern Standard Time, we have a short breakout which triggered at 98.15. I'll ask anybody if they have questions along the way, kind of to hold those thoughts until the end, so I can answer them and go from there. With each new candle, the price may change based on the new highs and lows and changes of ATR. This means that price is static for about 15 minutes and then subject to change. Breakouts require very specific criteria to trade. Price has to push through with authority, like it did here. When the price is hit, the lines change either to blue or red. This one red being short. And again, I left on these lines to show you calculations that the system is always running in the background but needs certain criteria in which to trigger. And here it triggered. Now there's something about our system that if we were in real-time market right at the moment, some of these lines here might be green or red. Very important knowing those types of lines. Green means that the market has moved 0.8 ATR, and if it's triggered, this is a good statistical potential that the move could go further. If it's yellow, like again, the market's not open, so we wouldn't see that. The market has moved more than 0.8 ATR, and the trigger there is a poor statistical potential that the market could move further. And actually, I think I have one of those right here, where the market was yellow. Market had pushed through. We received a breakout. This is the pound dollar at 1.5398, and obviously this particular signal failed. This was in yellow, and the probability of success was poorer than if it were green and triggered, like our other particular breakout on the euro yen here. Almost 2/3 of our breakout signals never trigger, and again, that means that it's very specific. I've left these trigger lines, like I said, here on the charts for you to see. This line in particular, our breakout line, is good for 20 candles, which is about 5 hours, 15-minute charts. And at the end of that 5 hours, you have a decision to make, whether or not you want to get in or out of the market. There's sometimes some conflicts between our dots and breakouts, but our rule sets say that if we have a breakout, breakouts trump our other dot settings or our other dot signals. So if we ever have a breakout, we ignore the dots and take our breakouts. Like we had a dot here, and because we were in squeeze mode or trigger mode, we ignore the dot, and if we got into that signal, we would stop and reverse and go short. Exit for our breakouts are very specific. We have a dot in the opposite direction after at least 40 pips into profit. We got a gray dot down here. We did exit this on the validation of the gray dot at 97.57, which is about, let's just call it 60 pips. And we had a dot, obviously the dot validated, so we exited the market. That's one of our exit strategies. Number two exit strategy is an EMA cross, which is a 314. These are the red and blue lines that you see on my charts. And those signify when the 3 crosses the 15 or 14, we exit the market. And then our final way, well, actually there's 2 more ways. One is a stop loss, which hopefully we never get, but we do. And the final way is a exit on 20 candles. Now, because we got a dot in the opposite direction, obviously our decision was made for us, but our line calculates for 20 candles, so at the end of 20 candles, if we're significantly into profit and we still see that the market is moving our direction, we can certainly move to break even or lock in profit and see how it and manage the trade on a candle by candle basis. So that's our Bollinger breakout or breakout system. Next, I want to talk about our reversal system. Our reversal system is just that, a reversal system. When the market is widely deemed to be chaotic in behavior, the market becomes more predictable. First reversals must exceed a minimum number of pips. This prevents false signals. A minimum width makes sure that the market is moving before, and our reversals are orange in color, before an orange dot can appear. For those who know anything about Japanese candlestick patterns, hammers appear at the bottom and are concurrent with oversold conditions. Hammers are characterized by a long wick and a shorter body. Hammering out a bottom, great indication of bulls buying and refusing to let the market fall any further. Best hammers usually close near the candle high. A short, like in this case right here, is a shooting star. They usually occur at price tops and are concurrent with our overbought characteristics and a long upper wick relative to the body. Japanese believe that there's trouble overhead. Bear selling, stop price from going higher. Best shooting stars close near the candle low. Reversals are only about 10% of the signals generated by the three systems. They're almost always against trend, and they are about 50% accurate. The reason that we bother with breakouts is when they are right, they're really right. And when they're wrong, there's often an opportunity to exit with a small loss. Exit here are dots in the opposite direction, a MACD cross, or about 5 candles. If price is not moving in our direction, we want to exit the market. And usually can get out at a small loss. So here was an example of a reversal. Market had moved quite a bit higher here, triggered our reversal signal. Obviously this particular signal did not work out, so after 5 candles we exited the market with a small loss, which I don't have a problem with as long as we're trying to capture a reversal in the market. I'll try to find another one here. Again, here's one on the CAD. This one did actually work out. We had a strong up movement, 4 or 5 candles in a row, a yellow dot or an orange dot printed, and subsequently the market started to sell off. And let's see if I can find one more. Here's a nice one. And this was on Thursday. Market came down, strong, 3-4 candles in a row, great orange dot printed, and market moved back to some sort of equilibrium at that point. So our third system, really MACD dots, which is really the workhorse of our program, usually gives us about 70 to 75% of all the signals that are generated. It's really the workhorse of the program and gives us the best opportunities in the market going forward. Dots came about as a way to identify crossovers, fast line crossing over slow. Basically, I'm talking about MACD. We found that the move was well underway when this cross occurs. So we wanted to anticipate this cross. When momentum stalls is when we want signals to appear. So basically, MACD is derived around the MACD indicator. We like MACD a lot. Reason that we do is most indicators are more lagging than MACD and also are bound by certain numbers, whether it's 0 on the histogram line or 100. So MACD has no limits. It's boundless. So we get a very good calculation of where the market is going, where it potentially can be heading. So we like it for that as well. Denise, and I'm going to stop real quick. Denise asks, does your software work on futures or only Forex pairs? I would like to say that many systems are right-fitted or only work on certain market types. Phil, in his infinite wisdom, obviously was a options trader originally. So out of that grew his love for Forex. We have found that our system like and trade our system on all markets, equities, options, futures, and Forex. So our system is not bound by one particular market type, but yet can transcend those typical systems that are only produced for one particular market and be used on all market types, which is very nice, very flexible, and allows you to the opportunity to trade other markets, not just Forex. Rob asked, does currency trade 24 hours a day? Yes, it does, except for Saturdays and early morning on Sundays. Starts about 5 p.m. Eastern Standard Time. So about 24 is 5.5. How's that sound? How our system, again, the dots came about is really looks for a calculation of how MACD falls. So basically we have a lot of selling, and I'm going to expand this here, a lot of selling pressure in the market, hence MACD is red or below the zero line, and the system looks for a calculation from the highest, and I'm going to say wick or bar, and then how it trails off. And based on that particular trail off is whether or not the calculation is there for it to print a dot. Obviously, during this particular section here of time, the market did not fall enough, which to Phil's and our system's credit, kept us out of the market for a possible failure. Obviously, the market continued to move down in this scenario. So the trade did not trigger, or the system did not trigger a trade or print a dot, so we would not be in the market during this particular time. Obviously, the market sold off again. We had a very long wick or bar here, and then started the calculation. We did receive a dot, and the market moved up after that. MACD and our system is looking for a directional change in the market. A dot usually prints after the math is correct. In this particular case, it printed 1 bar after our long particular bar here. Usually it prints between 1 and 3 candles after the calculation has started. Even our system looks to increase the probability of our trades even more so. And what it looks for is a 4 times higher time frame as well. And because this is a 15-minute chart here, our system also looks at a 60-minute chart. And the color of our dots are very important to distinguish what type of a market we're in. And I'm going to go over those right now. So here we have a gray dot. And this gray dot really is an attempt to warn us about scenarios that might not be prudent for us to enter the market. We did receive a reversal in the market, which was a great trade, and a gray dot, which both were winners and exited on this black dot in the opposite direction. Good stuff. Our blues and reds, okay, are with the higher time frame trend. So it's a stronger signal than would be a reversal or a gray dot. And we like to trade those as much as possible. Black dots and grays signify really that the market is in a choppy trading range. So I like to characterize that as a channel trading, where you see black dots above and below the market really price has not moved outside of that channel, and is a very good trading opportunity for us. Usually they pick tops and bottoms of that particular channel, so allows us to have many opportunities for success during that particular channel cycle. Bring up another trade here, euro dollar. We see a gray dot here. Market produced, went down in this scenario here, which was a nice trade. And I wish the market was moving, but obviously it's not today. So this is one of my most favorite loved pairs. It has been doing tremendous in the market. All of these lines here are real trades and exiting on our rule-based exits of either a MACD cross, dot in the opposite direction, or being stopped out. But we see here grays and blacks above and below the market, which signifies a choppy market. So we can really say that once price has exceeded that channel, then we would probably see a red or blue dot at that particular point. Exits on our MACD dots are dots in the opposite direction. A time-based exit, and by time I mean each one of the colored dots has a specific amount of candles in which we hold that signal. As I said before, reversal dots, which are our orange ones, we hold those for a minimum of 5 candles. If price is in our favor, then we manage on a candle by candle basis going forward. The probability of any signal, okay, the further and further you get away from the dot candle or the breakout, the probability of success becomes less and less. And more so if you're not into profit after a certain amount of candles. Our black dots and our colored dots, which are red and blue, red's seeing a lot here because the dollar has been obviously on a major tear lately. And we can see some blues here on the dollar Swiss franc, hopefully. Yeah, here's some blues. Anyway, a blue dot being a buy signal. If we're seeing these colored dots, we want to hold those because they are with the higher time frame and higher trend. So we hold those for a minimum of 10 candles. After 10 candles, if price and market action is not with us, we choose to exit the market. Here's a good example of this particular short position. We held this candle, we held this order after validation for 10 candles. We exited with about a 6 pip loss, but as we see here, market was very stagnant, price not going anywhere. I'd rather take a 6 pip loss than a huge loss. So we have opportunities to exit the market even if our signals are not triggering correctly, and I shouldn't say triggering correctly if they're not yielding us positive pips. Another example of a good system is that we have opportunities to get out of the market at very small losses. There's 3 rules that really any system should follow. They are, in trending markets, trade with the trend. Obviously, we hear this all the time. Trend is your friend. In a trending market, trade with the higher overall market trend. Obviously, again. In a choppy market, always initiate a trade from an extreme price overbought or oversold position. Obviously, our system does do that for us. Black dots, or grays, as we've found, are telling us about an extreme situation. Again, channel trading, trying to predict market bottoms or market tops in which to trade from. The color of a dots tell us the condition. So really, from a trader standpoint, we don't need to figure out, is the euro dollar in a trend down, or is the pound yen in a trend up or down, whatever. The system tells us that. So it's very intuitive to that respect because it again looks at the higher time frames to tell us trends. I'm going to bring up a couple 4-hour charts real quick to show how it's been doing on. And the first one I'll bring up is the pound dollar. I took a liberty of drawing a couple of lines before. Again, reds. This is a 240 chart, red dot with trend down. Obviously, again, this particular chart looks at 4 times higher time frames at all times. So if we have a red, that means our 4 times higher chart, which is math is a 960 chart. We're in sync with that particular chart. Here we go with a short dot, red, obviously a short, down. We exited on a dot in the opposite direction. Gray dots here being very good filters of exiting the market. Also, I say that they can also be very good buying opportunities. However, you know, we tend to, until you really understand and fully understand the system, that we say use them for exit strategies and not entries. But I did do an example here of a gray which had a tremendous move up. This was a 200 pip winner. This gray down short was another 300 pip winner. And also we see our reversal dot. Well, we had a red here also, which was the continuation of this particular, put up across here, of this particular gray dot down. We got a red dot again with trend down, and then we got a reversal signal. Talk about the euro a minute. We all know, hindsight always being 20/20, that the euro has been on a downtrend. And I produce YouTube videos pretty much on a daily basis with our sentiment and what's going on in the market. You can see those on Currencies FX on YouTube, also posted on our website under our not blog section, but our forum section, and it'll say trades of the day. We called this market reversal back, this was in October 27th around. We got a real nice reversal and a black dot, and now we've seen subsequent shorts all the way down. 1, we did see a little uptick in the market here, 2, 3, 4, 5, had some grays in between here, which with this strong trend we would suggest not trading, but it met the mathematical requirements. 6, 7, again 8, down here 9 since that time. All been short the market. I'll take a break here for a minute. Dennis or Denise asks about what's the smallest time frame you use. We like higher time frames, obviously, but certainly we work on 15-minute charts. And if the market is very, very active and very volatile, we'll drop down to a 5-minute chart. But anything lower than really 15-minute, you get into a lot of market noise, what we call market noise. The system has, and anybody's system has a hard time figuring out what the market is doing. The market is moving too fast on 1 minute, 2 minute, 3 minute charts in order for the system to really calculate a proper entry or exit of that particular market on that lower time frame. So the higher time frames, as you see here on the Euro 240, we had numerous positions going short. Most of them, about 7 out of the 9, were winners. I'll take fewer trades and better winners than I will trying to scalp the market for 5 or 6 or 10 pips and working that hard. Sell stops look like ATM static. Not sure what that means, Rob, but we'll come back to that. One thing that is interesting about, and Peter brings up range charts, our system will work on pretty much any chart configuration. Here obviously we're looking at candlestick charts, but certainly some of you Renko traders, the system will work there. Kagis also, tick, etc. So certainly we haven't tested all of those particular chart configurations, but in some of the testing that we've done on Kagis and Renkos, works very well. Range chart view, blue, strategy, range. Not sure what you're asking me there, Rob. Maybe you can rephrase that a little bit. I want to pull up the dollar Swiss franc. Obviously, we've been in a upward move here. A lot of blues, blue dot here. Exit strategy was this long candle down, and also at the same time it was a MACD cross. We have some blacks in this particular time frame right here. From here to here, the market was actually choppy. And how do we know that? Black dots above and below the market. And we saw a nice short dot here, and then we had a reversal and then a subsequent black long, which were both tremendous winners. Now we've had two blues in a row, which means with trend buying. And we'll look at an Aussie dollar. Here again, we have a down movement. This was late last month, or excuse me, this was late last year. So this was in a nice downtrend, and you see the time frames down here on the bottom. We had a gray dot, which was a tremendous winner. Then the market was telling us that we're in a still an uptrend. Obviously, we see from down here, the market's in an uptrend and still in an uptrend. And this particular gray dot ended this blue one, and the market is now saying that it's got to figure out which way the market is going. If it's going to reverse and go shorter again, or if the blues and with trend are still going to be intact, or those price movements. Okay, as I talked about, our system will work on and is not right fitted for any particular currency pair or market. So it's flexible enough to be able to work on most all time frames. And I really don't recommend going any lower than 5 minute, but some of our people use it as a scalping strategy, and that's fine if that works in your trading plan and you've tested it out enough to feel comfortable with that type of a trading strategy. So it'll also work on pretty much all chart configuration types, which is again its flexibility, and finally can be used in all markets: equities, options, futures, and forex. So I'm going to go back to 15-minute charts. And now I'll kind of open it up for any particular questions that anyone might have. If not, and while anybody's asking any questions, I'm going to start a quick slideshow. Hopefully you'll be able to see this. Dollar per pip. Well, Rob, if you're trading full lots, which is 100,000 contract in forex, that equates, and I'll just keep it simple, to $10 per pip. If you're trading a 10,000 lot, that would equate to $1 a pip. Now, the dollar Swiss franc and a couple of the yen pairs are sub-dollar, but just to keep it simple, a 10,000 lot equals $1. 100,000 lot, or a full lot we call it, is worth $10 a pip. Ray, if you'd help me project the slide I would appreciate it. Oh, start slideshow. Okay, maybe that's it. Okay, well, while Ray hopefully will come back in here and help me with the slideshow, go ahead and fire off some questions, please. Denise brings up or Dennis brings up a good question. Using a 40-minute chart, we're in a trade for a long time. How do you manage that trade while you're not at the computer? That's a good question. And what we talk about is obviously if you're in a 240 chart, you really have to look at the chart every 4 hours. Okay, so you're not micromanaging like every 15 minutes on a 15-minute chart. So usually the stops are a lot larger. And how you would manage that trade is you would set your stops and look at the chart every 4 hours to see and make sure that you are still continuing into profitability based on that particular dot signal. And that's basically how you would do it. Also, our system has the ability to send you entries of the dots via text and or email and certainly audio alert. So you do not have to sit at your screen 24 hours a day to get a signal. Phil is an avid photographer, so he likes to get out and shoot photography. So sitting at the screen, he obviously wouldn't have an opportunity to enjoy that. So while he's out and about and gets a signal on a 240 chart, 15-minute chart, 5-minute chart, whatever you're trading, the signal will send a text to your phone alerting you that there is a dot, and we would already know what that entry would be based on the signal. So you don't have to sit at your computer. Automatic trade management, yes, you can. Automated trade management is a function of NinjaTrader, and you can certainly use that, yes. I do want to say a few things about our system. We have obviously a 240 some page manual that really goes through in very, very specific detail about the workings of our program. We offer something that is very, what I think, unique in the marketplace, is we offer unlimited support to our Currentsys members. I don't think that we've ever given up on a trader that first hasn't given up on himself. So it's our job and our, really our job to try to help everybody be successful at using the program. The program can be used as mechanical, as I've sort of talked about today, or can certainly be used with a lot of trade discretion. The system is flexible enough to be able to cater to your particular trading style, and or to be as mechanical as our rule set has been written. What is the stop on a 240 chart? Our stops usually are market based and can either be swing highs or swing lows of that particular chart that we're on, and we're talking about 240s, so swing highs and swing low in price, or we can attach a 3 ATR to that particular chart. So it could be on a 240 chart, it could be 90, 100 pips as a stop. Are there any free trials? There are free trials on NinjaTrader. So if you would like that, please let me know, and you can get a hold of me at john@currentsys.com, and we can schedule a time to talk about the system and set you up with a free trial. Rob asked, do I use the automatic trade management, or ATM, on the NinjaTrader? We're actually in the process of automation. So a lot of the signals that you see on the system here does use some of that technology. I wanted to show that today. It is not for sale at the moment, and we really use automation as an extension of our manual trading. Anybody that wants to fool you that automation is the end-all, the be-all of trading is truly lying to you. All trading regimens, no matter if it's manual or automated, must be monitored. And you have to look at even automation as a means to get into the market when you're not there, but then to monitor how the system and how the market is treating you after you get into the system or into the trade. So automation is a great tool in order to be used to help you become more effective at trading, but we still monitor all of our trades even with automation. Do we have a link to our site? Yes, we do. And if I could figure out how to type, it would work. There you go. Also, as I said before, we offer unlimited support to all of our people, and that can come in the forms of either email, certainly on the phone. We have real phone numbers that people can actually call us on the phone. It can come in instant messaging. We connect to your computer. A whole bunch of different ways in which to support you and try to help you utilize the system effectively. One of the things that I try to stress with everybody that I personally mentor is trading plans. Very important to have a trading plan and incorporate your style of trading into the system. Do you set up PayPal payments, or is it done in one payment? We can talk about that on an individual basis. We have done that for people in the past. We're talking about payment plans, so we can discuss that on a individual basis. And if Ray was around again, Ray, are you here? Having an issue with starting the overview. Anyway, Ray's not around. Kelly asks, can you install the indicators on one or more than one computer? We do allow the opportunity for you to install the system on multiple computers. We don't allow you to go crazy with a whole bunch of computers, but if you certainly use it on one or two computers, say your Ray's out to lunch. Yeah, you're right. Certainly, if you use a home PC and then a laptop, we would certainly validate you on both particular machines. Any other particular questions before Ray comes back to lunch? I would like to do a system overview. Also, because of your attendance today, our system retails for $1,095. which we feel for a system that, again, transcends all markets, equities, options, futures, and Forex, is pretty darn cheap. But because of our affiliation with NinjaTrader and now I'm too loud, huh? Okay. Our affiliation with NinjaTrader, we are reducing the price for a one-time of $8.95, which is a $200 reduction in price to all attendees today. Certainly you can get a hold of me at john@currencis.com, and I'll put that here. john@currencis.com, and I will, if Ray has not already done, given the email or the link address, I will give it to you myself. Off of our normal website, does not have that particular price on it, so this would be a NinjaTrader special. We have trade data from dating back to 2005, which is on our blog page and also on our YouTube site, which is Currencis FX. Currencis FX and our blog page. These are weekly results, so you can go back and check out how the system. Oh, hey Ray, thanks, appreciate that. Ray, also, is there a way for you to help me with the slideshow? Real quick, I know we're getting close to the end here, and I would like to just talk about a few things. Cool, thanks. Anyway, gives you well over, now almost in our 8th year of weekly reviews and pip totals for the week based on the pairs that we reported on. I don't know if anybody can see the slideshow yet or no. Not sure if it's projecting or not. Oh, it is. Okay, cool. Okay, great. You know, as I told you that we have one complete system. Advantages: at least one system is always active while the others stay quiet. John H. asked about E-minis. As I said before, John, the system works in equities, options, futures, and Forex, and we like futures a lot. No need to choose. The signal automatically appears on the charts. As you saw today, we get breakouts when the breakout is specific. We get dots when dots are there and specific to the market action. And as we talked about, dots trending and range bound, reversals, unsustainable market action. Obviously, if we get a reversal, it was a too fast move up or down, and the probability of returning to some sort of medium or a reduction in price is a good probability. And breakouts, low volatility, typically through the Asian market or market squeeze, and then explosions. Here's an example of some of our dots. Obviously, blues all the way up here is a nice uptrend. Reds and blacks, or these are actually white dots, are trending down. Here's a good example of a choppy market where you have dots above and below the market, as I said before, within a channel. John, 50% overall accuracy. That was specific to the reversals. The reversals are only about 10% of our overall dot signals. And again, those are trying to signify high explosive moves up or down and a reversal in that particular trend. So those are less accurate, 50-50 on a particular reversal dot. Again, we like those because when they're really right, they're really right. As we saw in some of the 240 charts, especially on the euro dollar, called reversals at 142. Right now we're at 126. that's a heck of a move. The rest of our signals on dots, which is about 70-75% of our signals, range anywhere from 68% accuracy through 75%. And our breakouts are somewhere in the 60 to 65% range of accuracy. Also, in this, there's some videos on our YouTube page, and I've labeled those "Look Mom, No Dots." Very important for any system to filter out market noise. And here's a great example of no dots. We get a lot of these time periods like around holiday where maybe some of the markets are closed around the world, or the US market is closed, and we get no dots. Really the probability of success during times like this is very low. So the system weeds out that and says, don't trade that market. Okay, we want dots and signals. There are dots and clear signals that we want to get into the market. So when there's no dots, that's the system telling us, hey, get out. Don't get in. Excuse me. John, there is specific exit strategies. As I talked about earlier, on our dots, it is a dot in the opposite direction. It's either time-based, an exact amount of candles in which we would hold that particular signal, and or what we call is a MACD cross. So there are specific rules to exit and also enter the market. Here's an example of reversals. We have nice down markets here, nice up market, then a reversal. These are, we would say, and how the system was developed is those are unsustainable moves. Breakouts, as we talked about, we had some examples today on the euro, on the pound, etc. I said this, I think it's Kanu, K-A-N-U, any trial on the system. Yes, there is a trial. I ask you to get a hold of me, John at currentsys.com, and we can discuss the trial utilizing the Ninja platform. Breakouts are specific. They are volume based, they are ATR based, in which price has to push through a particular price in order for that signal to trigger. Here we see a nice short and then a subsequent nice long reverse or breakout. Trade reviews. Weekly, we have trade reviews, weekly updates. We have a full forum, so you have access to others. A live trading room, which I host every Monday and Wednesday at European Open. So that's free to join. A comprehensive user manual with timely replies to your, any of your questions. We try to be overly anal on getting back to you, usually within, sometimes minutes if we're not working with another client, but certainly within an hour. We have what we consider one of the best correlation tables in the market. Has 50-some different pairs and gold, silver, oil, S&P 500, which some people say has correlation to the euro dollar, back and forth. So you can certainly utilize that particular correlation table when you're looking to trade the different pairs. We talk about correlation a lot, where we do not want to trade correlated pairs necessarily. Hard to get away from that sometimes, but certainly if we are trading correlated pairs and we know the amount of correlation that is involved, we can reduce our trade size to stay within certain limits. We have a currencies calculator, which currently is under a new build. We're actually going to go to a web-based model, which will be pretty cool. It will have all of the different tabs that you see here and allow you to utilize the different trade risks, pip values, calculator, etc., correlation, rollover, all of those different things. And we give that away for free. You can download it on our website. Website is currencies.com. We have numerous videos on our website for you to take a look at and to sort of get an overview of the program, maybe more in depth that I've shared with you today. Certainly, we can do one-on-ones if necessary for you to understand anything that we've covered today. We do have a chat room on the website. We also have personal chat, live chat if you will, which would get a hold of us on an individual basis and answer any specific questions that you might have. Well, I want to thank everyone for attending today. Steve, my partner, somewhere in the market there or somewhere around, and you can certainly get a hold of me at john@currencies.com. I do want to say thank you very much for Ninja allowing us to utilize their bandwidth and their projections today. Also, on a personal note, and they're certainly not asking me to say any of this stuff, I use the NinjaTrader platform on a daily basis. I like it a lot. I find it very user-friendly, and I also use their kinetic data, which I find is very, very good, unfiltered data. Data is worth its price in gold. So if you're out there worrying about spending $5 on data, well, you'll probably not get the best signals in the world. So unfiltered and good data is the proper way to go, and I like their data a lot. Link to the guest chat. Go to our main webpage, currencies.com, and at the top of the screen, you'll see a link there that'll say live chat, and you can talk to us there. Thank you, Ray. Appreciate that. And that's it for the day. If anybody has any other particular questions, I'll answer those now. Well, one other quick thing that I want to talk about is mentoring. It's something that we really enjoy doing. We like to see our traders having success. It's something that in 2012 is one of my hot buttons. I really want people to be successful at using the system. We're working with groups all the time. We like to keep those groups small so we can give more personal attention. The market has been giving us great signals lately. There's been many pips to be had. Obviously, there is no guarantee that any signal is going to work or not. However, lately the Aussie and the New Zealand pairs have been on a tear, and as evident in some of my videos on YouTube, I'm liking those pairs quite a bit because they are moving very nicely, and we're getting a lot of pips. The euro dollar obviously has been in a nice downtrend, and based on the 240 charts, when we're in that downtrend, I've been telling our traders to, anytime that we have an opportunity to short the euro on a 15-minute chart, I'm suggesting to do that. Longs, I'm saying take with caution because we are in such a downtrend on the euro right now. So it makes it easier, obviously trend is our friend, to trade with the trend. So these are all things we do. Please try to follow us on YouTube, also Twitter. I do Twitter some of our trades, and certainly the posting of any of our videos on a daily basis. I do post those to Twitter, so you can check us out there. And is there any other questions? If not, we've run about an hour and 10 minutes, and I know that Ray wants to go skiing in Denver, so I'm going to say that we'll wrap it up if there are no more other particular questions. Okay, Ray, I think that's it. Time till auto. Oh, time till auto. You mean release of the auto system. Peter, I want to again say something about automated trading. No one, even when we do release automated trading, will be able to have automated trading until they personally buy the manual system. The reason that I'm doing that, Peter, is very simple. People believe that automation is the end-all, be-all of trading, and without thoroughly understanding why the system is doing what it's doing, you will fail. I don't want to see anybody blowing up accounts, and I don't want people blaming Currencies or hurting our reputation because they didn't understand the system and they didn't know how to use automation. Automation is certainly a great tool. I do use it, but in the hands of someone who does not know our system and is not familiar with our rules, they will fail using the system. Until someone is thoroughly, ingrained in our program and gone through training on the actual manual system, automation is not available to anybody. It really is based on your ability to learn the system, trade the system effectively, manual I'm talking, and then we'll make discussions on if automation is available to you and would be a good fit in your trading regimen and style. Hope that answers the question, Peter. Okay, that's it for today. I appreciate everyone being here. Is there an average number of times a day it trades? Yeah, actually, on a daily basis, I can give you on a weekly basis, and then you can do the math from there. In a 5-day period, typically we get anywhere from 20 to 25 signals on a 15-minute chart. On a 240 chart, we get anywhere from 2 to 3 signals per week per chart. So in a 5-day period, 4 to 5 signals per day. Okay, thanks a lot, Ray. Thank you very much for allowing us to, use NinjaTrader and allowing us to use your projections. Thank you very much, and hope to work closely with some of you today in the future. And certainly if there are future questions, john@currencies.com, or come to our website, click on live chat, and someone will get with you on an individual basis, and or we will give you phone numbers and or contact you individually. Thanks again, and appreciate your time on a Saturday, and enjoy the rest of the day.